This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, dear friends, right back to the gold market. Well, just in 2 words of our expectation on the gold market, I will not talk a lot about the same things that we have discussed within the previous week and on the weekly research. So guys, in general, we expect deep retracement on the gold market to the 1350 area. And we would like to see also some kind of the double repo buy pattern that could trigger this retracement right to the 1350 area. That is our desire and wish to get. That would be just nice if we would be able to get this pattern, because that will just give us another possibility to trade the markets to the upside. And will give us the clear pattern that we will be able to stick with. Anyway, in our weekly research we said that if market will form the stop grabber here, bearish stop grabber, that will probably could trigger the retracement down and to form the another bottom of the potential double repo pattern here. But the trick stands with this candle. Because if you draw the MACD predictor line, you will see that we indeed have got this bearish grabber pattern. But right now market already have passed through it and stands above the candle itself. And the trick stands with the inside intraday target. You'll see it a bit later, but the idea is that market has intraday target right here, is 1618 extension. That's why, since market usually gravitates to such objective points, in fact, this stop grabber was really doomed even before it has appeared, because market has the target that stands above this candle. So anyway, the chances on the appearing of the double repo pattern still holds, because to get the double repo, we need to see that market will turn to the downside prior to hitting any significant fib resistance area. Other words, double repo as better as market doesn't touch the significant resistance, because when the market touches the significant resistance, some traders take in the profits and the steam moves out from the boiling pot, and the short positions that have held by the traders within thrust up starts to close when the market hits some resistance area with this move. But when the market shows just slight retracement and doesn't reach the significant area, all steam stands in the pot and all the short position still there when the market doesn't show any significant retracement. That's why when the market really forms the double repo, that in fact means the capitulation of the bears, the stops of this position start to trigger, and that adds much more fuel to upward action. That's why it's better to not get the reaching of the significant fib resistance area when the market forms the double repo pattern. Well, and that's why the chance is still here, because market, as you can see, hasn't reached yet the 1320 area. Also, guys, take a look that this in general very significant resistance, because that is the April pivot point, gold line, and weekly pivot's resistance one stands in the same area. Okay. So in general, overall setup, the whole setup that we have discussed here with this brand body weekly trade to the 1350, this possible double repo still valid. So there's no problems yet with them. Let's take a look on the intraday charts. There are some details that could be important right now. On the 4-hour time frame chart, that's the target that I have spoken about on the daily time frame chart. That's our bearish stop grabber. So you can see the market has the target that stands above this daily candle, small daily candle on the that in fact the bearish stop grabber. This candle, this stop grabber has been doomed, because market has the gravitation, usually has the tendency to hit the target before start any retracement. And right now we stand at the point where this retracement really could start. and market really could turn to the creating the deep retracement to the downside. It's very difficult to assume how deep it will be. So if we would get the real stop grabber, we could suggest that market could take it out of these lows even and create the lower bottom of the second bottom of the double repo pattern. But as we do not have the grabber, this retracement could be of any depth. But the one moment that we need to get is the closing below the 3x3. So we can see for today trading station 3x3 stands at around weekly pivot support 1 is 1246. Tomorrow it will stand at 1293. It's right here. So if we suggest that retracement will happen today, tomorrow, then 1293 is right here. So market should happen either retracement to the weekly pivot support 1 or to this area, to the 618 support, to get us the close below the 3x3 that we need for double repo pattern. I hope you understand the logic that I just used for description of the situation with the double repo buy. Okay. So anyway, gold market also has the habit to show the deep retracements, especially when it completes some extended targets as the 1618. And this retracement really could start as the market finally has completed the nearest target, the initial target of this initial ABCD pattern. That's the ultimate 1618. Any retracement, some retracement should follow. Maybe that will be some sort of the head and shoulders. Maybe some other pattern will be formed. Maybe some ABCD down will be formed here. Whatever it will be, we need to get some deep retracement first. And maybe if market will restart, move to the upside, we need the second close above the 3x3. That will be the confirmation of the double repo pattern that will let us to take the position with the target at minimum around 30 and 50 area. That's our short-term trading plan. So let's see what will happen on the gold market in the nearest future, today, tomorrow. On the hourly time frame chart, guys, in fact, I don't see any interesting, except maybe this potential divergence. So if market will turn north right now, turn south right now, this could give us the divergence with the MACD. Maybe this will be the 127 head and shoulders or something of that sort, because you can see that current top also this 127 extension of the previous retracement down. So let's be watching. So if we will get any short bearish pattern here, I absolutely have no objection against the possible taking of the scalp short position with the target somewhere, the deep retracement. But right now, as you can see, we do not have any patterns yet, because market just has hit this area, and it's very, we don't know how market will react on this area. So let's be watching. But in general, I think that our short-term setup is quite clear. The major pattern that we are watching right now is the daily potential double repo buy, and our medium-term setup, our major pattern is the weekly bread and butter buy. That should lead us to this retracement. What will happen next, we will see.